during our research now, we find out that if you look at flexicap, so the benchmark is BSE 500, long-term return of 15%. But if you look at all three indexes separately, small cap, mid cap and large cap. So large cap, long-term 15%, mid cap 17%, small cap 19%. So if I have a multi-cap portfolio, meaning where all three have got allocation, the average return will be 17%. Assuming that over and above that, we have 4%, 5% alpha generated by the fund manager, is it a fair expectation that if you have a 4 years, 5 years kind of horizon, such kind of a strategy can generate 20% kind of returns?
So Ankit, you're putting me in a spot and asking me to commit a number. But, to be fair, mathematically what you said is correct. So I won't deny that. It will also depend a lot in terms of how the investment manager makes the allocation. While we've talked about the index level, while the small cap index has moved up by about 30%, but I know there are a lot of small cap stocks which have done extremely well. And the flip side is there are stocks which have not really moved at all. So when you're making an allocation of 25% or more in a multi-cap, it's also important to see where are you allocating in terms of what sector. First, you need to take a call on what is your view on the market, okay? And then you need to say, given that this is your view in the market, what kind of a beta you would like to have, and given that beta you like to have, what sector would you like to allocate? So let me just give a small example. Supposing my view on the market is very positive, a typical FMCG stock is relatively low beta, okay? So the chances that I will have FMCG stock in a falling market a lot more for my allocation is going to be very high. However, if I'm looking at a bullish market, the chances that I'll have more mid and small cap banks which are also high beta in my portfolio would actually increase. So that's the way I would actually decide what is the fund that you should be looking at. But as an investor, 2 or 3 funds that I would actually look at is the Balance Advantage Fund, which is, you really don't have to make a decision in terms of the asset allocation. It is run as a multi-cap. You'll have large cap, mid cap and small cap exposures. And if you go back into history and check our multi-cap, we've actually gone very high on our mid and small cap exposure also. So that's the way I would look at it. That's one fund that you would look at. And the second one is, of course, your multi-cap, where there's a defined allocation where the investment manager does not take a call in terms of what should be the allocation to each of these categories, because it's predefined. There's a minimum which is there. So the error which you're going to make is not really the error. The allocation that you would make is only on the 25%. So to that extent, you're going to be much better off in a multi-cap fund.
Thank you so much, sir.